Tom Mastny's with us. How are you, sir?
I'm good, Neil. How are you?
Excellent. Well, I really like what you shared about baseball in part one, and effort, strategy, and patience, and learning, and education, and coaching, and then StubHub with technology and transparency on what things should cost and decisions employers have to make. You say there are four benefit strategies businesses keep trying to work on to contain spending. Why don't we start with the first one, fully insured contracts. What does that mean?
Yeah. So you know what the definition of insanity is, correct?
You do the same thing over and over and you expect different results.
Right. Well, unfortunately, that's where our world is. We are in a reactive community in employee benefits, and something has to change. So fully insured contracts is the world that we live in, and that is where we've been for the last 20 plus years. Augusta and the CSRA in general is a small market. So small markets are really employers that are under 500 from an employee count. Augusta is a step further down than that. I'd say our average size employer is probably in the 40s to 50s. Mm-hmm. Up until the last couple of years, we really haven't had access to certain contracts and different funding mechanisms. And we live in a fully insured world. So fully insured contracts is a strategy, believe it or not. It has been our only option, but it's a strategy that we keep doing over and over. The problem with fully insured contracts is there is zero visibility into data, so I don't know what our claims are, and there's zero control. So I can't make any adjustments to plan design to really benefit my company as a whole, and I don't know what's driving my costs. So we get our renewal, 75 days out if we're lucky. 60 days out is standard. That's what the insurance companies have to give us. It's 45 days if you're in South Carolina. Mm-hmm. So right there, they're putting our backs against the wall and saying, hey, we need a decision right now. By the way, you're getting a 20% rate increase.
Wow.
And we say, why? And they say, well, wouldn't you like to know? Right?
It just costs more, but we don't know what costs more.
Take our word for it. Trust, they say you overspent. Okay, well, tell us why. That's the biggest key, right? Why? And that's until you know why, you can't make an educated decision. We're living in a reactive world when we're in a fully insured contract. Fully insured contracts may be the right funding mechanism for you at the time, but it's not your only option.